Welcome. Today, Andrea, Rocio, Alain, and myself will have a look at the performance management of SAP. We will focus mainly on four topics. At first, a short introduction of SAP. Secondly, we will analyze the business model. After that, we will have a look at the financials. And lastly, we will do a SWOT analysis and an outlook for SAP. So let's get started.
The name SAP comes from the initials of Services, Applications, and Products. This company was founded in 1972 in Waldorf by five entrepreneurs: Dietmar Hopp, Hasso Plattner, Hans Werner, Klaus Schierer, and Klaus Wellenreuter. The five entrepreneurs were employees of the company IBM. As they were working there, they were developing this software, but at the end they were told to stop because it was not necessary for IBM. By creating this company, these five friends transformed the world of information technology and also the way companies are negotiated, managed, and operated. In 1980, they founded their first own SAP office in Waldorf, Germany, where they had 80 employees. In 1988, SAP became a public company through an IPO as the managers wanted SAP to succeed even more. From that year until 2009, SAP evolved a lot facing the internet and the new economy by launching the MySAP.com strategy. In 2009, SAP conquered a place in the three most important markets of the future. These were mobile technology, database technology, and cloud. As the SAP company grew, it was gaining more and more competitors. In 2019 occurs the acquisition of the US company Qualtrics. This acquisition placed SAP in a leading position. Nowadays, SAP is responsible to build solutions for the Internet of Things and machine learning for complex analysis and blockchain. As you can see in the graphs, SAP's growth in the last 10 years has been impressive. When we talk about revenues, you can see that SAP has gone from earning 13 billion euros in 2010 to earning 28 billion euros. Another aspect where you can see SAP's change is in the growth of the numbers of employees, from 52,000 to 101,000 employees in 10 years. How did SAP manage to become the most valuable company and one of the Germany's biggest success stories? To answer this, Ala will have a look at their business model.
Andrea and I will now provide a brief overview of the SAP core business model. First, I'll start with the value proposition. After that, we will have a look at SAP's customers and we will develop a general customer base SAP. After that, we will have a quick look at SAP's risk factors and place them in a strategic risk map. Next, we will identify the three main revenue streams, and lastly, we will have a look at SAP's main competitors. SAP offers two primary value propositions: innovation and brand status. The company has a long history of introducing innovation projects, ranging from its groundbreaking ERP software to its SAP HANA memory platform. Also, SAP creates value by identifying the business needs of their customers, then developing, delivering software service and support them to these business needs. Through close cooperation with their customers and partners, SAP aims to ensure that the software creates value for their customers. In order to be able to do that on a high technological scale, SAP also has three major initiatives specifically dedicated to innovation. First, we have the SAP Labs, which focus on enhancing core SAP products and developing new cutting-edge offerings based on SAP HANA. The company operates 16 labs in high-tech clusters in 30 countries worldwide and has worked on projects for 98 of the 100 most valuable worldwide brands. Second, the Innovation Center network that aims to combine the agility and creativity of a startup with the resources of a major corporation. It identifies multidisciplinary teams like featuring product experts, engineers, designers, business developers, etc., and connects them so they can cooperate on a wide variety of projects. Specifically, they develop unconventional concepts with a goal of opening up new markets for SAP products. Examples include smart traffic solutions and customized cancer therapy. Third, the Global SAP Co-Innovation Lab Network aims to improve the capabilities of SAP's customer and partner ecosystem through a network of a global expertise and leading technologies. Specifically, it enables members to engage in innovation projects based efforts. SAP maintains a strong brand and it's well established because of its long history, which include many firsts, by developing software, providing this software and services to the customers, and engaging them in feedback. SAP generates results such as growth, profitability, employee engagement, and customer loyalty. Now let's try to identify the main customer base for SAP. In order to do that, we have to look at the reviews by regions first. Between 2009 and 2019, SAP makes nearly 85% to 90% of its revenue in Europe, Middle East, Africa, and America. The main revenue percentage of the APG region is just shy of 10%. This concludes that SAP's main customers are based on somewhere in Europe, Middle East, Africa, and America. Next, we will look on the top right. There we can see companies that use SAP by its employee size. As you can see, the biggest value have companies with an employee size between 11 and 200. These are typically middle class companies. But of course, SAP wants to attract or gain more valuable from the 5,000 employee companies. Lastly, we will look on the bottom left where you can see the distribution of the customers by job title. Unfortunately, this data just represents the America customers, but we think it's still also applicable for the Europa, Middle East, Africa regions. You can see here that almost 60% of the customers are developers and administrators. So concluding our research, we determined the customers base of SAP. This would be developers and administrators for companies with an employee size between 11 and 200, which are based on Europa, Middle East, Africa region, and America.
Now we will have a look at some risk factors for SAP and how they fit in a strategic risk map. Firstly, the economic and political environment. The probability that changes will affect SAP are likely. As we can see today, especially political changes during a pandemic could affect SAP hard. That's why the impact is classified as business crucial with a high risk level. Secondly, sales and revenue. SAP is such a big company and is the most valuable one in Germany. Sales and revenue problems are very unlikely and the impact could be moderate. Then we also define the human workforce and cybersecurity. Especially for a software company, the cybersecurity is a very crucial and business critical part. Due to the size of SAP, they're highly likely to get targeted by hackers, as already happened. And lastly, innovation. As Ala mentioned before, it's very important for SAP to lose contact due to the lack of the innovation. Of course, the probability is moderate, but the impact could be business crucial as SAP defines themselves through new innovations. Now we put and define all of those risk factors in a strategic risk map. The position of the bubbles represents the correlation between impact and likelihood, and the bubble size is SAP's influence on the risk. Now let's have a look at the revenue streams of SAP. SAP has three revenue streams: cloud subscription sales, software licensing fees, and service fees, which include services and support. As you can see in the table on the left, from 2015 to 2018, the services and software support marked the highest revenues. By 2019, the cloud subscription sales skyrocketed and almost tripled in size. This concludes that by percentage, cloud subscription sales are the biggest revenue stream, followed by service fees and software licensing fees. Now, we're going to define and have a look at the key competitors of SAP. Firstly, on the top left, you can see the revenue generated from big data and analytical software. As you can see, we have four big players, which are Oracle, Microsoft, SAP, and IBM, followed by Salesforce and Adobe. You can see the revenue generated from 2015 to 2018 in billions. Now, let's have a closer look. SAP is placed third between Microsoft and IBM. IBM's revenue growth over the years looks very moderate and is about to stagnate. Microsoft, on the other hand, has a very high growth over the years, passing by SAP in 2018. Now, we're going to have a closer look at Oracle and Salesforce. These two, and especially Oracle as a market leader, we will use later to benchmark financial ratios. Oracle was founded in 1977 and has a very similar product portfolio as SAP. They employ 135,000 employees over the world and of course are located in California. Salesforce, on the other hand, was founded in 1991 by former Oracle employees and primarily focuses on the cloud market. As you may recall from SAP's revenue streams, SAP is also heavily interested and represented on the cloud market. Salesforce has 49,000 employees and also is located in California. As you can see on the world map, all competitors of SAP are located in America and most of them on the West Coast. What can we conclude from that? You will have to wait till the end.
Now let's have a look at the financial analysis. A good starting point here is the horizontal and vertical analysis of the income statement. So let's start with the horizontal one. This analysis is an approach used to analyze financial statements by comparing specific financial information for a certain accounting period with other information over time. In the left table you can see the sales number of SAP, Oracle and Salesforce. In the right table we are looking at the net income of all three companies. However, just by looking at the numbers alone we only gain a limited view. That's why I calculated the CAGRs for sales and net income. This shows us the average annual growth rate over a certain period of time. The sales CAGR for SAP over the last 5 years was around 5.79% and the net income CAGR 1.62%. To get a better understanding of this number, we compare or benchmark it to competitors in the same market. Looking at SAP and Oracle, SAP is growing almost 5% more than Oracle and is getting 1.62% more profitable over time. Oracle has in fact a higher net CAGR than SAP, which shows us that Oracle focuses on becoming more profitable by maintaining a small but constant growth rate. Now let's have a short look at Salesforce. They have an outstanding sales CAGR of almost 20%, which shows us that they are probably growing at a fast pace. But looking at the net income CAGR, which is significantly lower, shows us that they are burning money instead of gaining, especially in 2015 and 2016. In our opinion, SAP, compared to Oracle and Salesforce, has pretty decent CAGRs. They are still growing fast, but remain at the same time profitable. Now let's have a look at the vertical analysis. The vertical analysis shows us the relationship of each item of the income statement in percentage to its base. The base here would be total revenue. In the table on the bottom you can see the income statement of the year 2019 and also the percentages of sales from 2019 back to 2015. You can see here the absolute numbers from 2015 till 2019 in the diagram on the top left. Here you can see that especially over the years, the total revenue here, TR, and total operating expenses, TOE, had a significant jump. Percentage-wise, which you can see in the table on the bottom, all statements remain relatively the same over the years. But again, you see an increase in total operating expenses and because of that a following decrease in operating profit. Furthermore, the net income dropped almost 5% from 2018 to 2019. This seems very worrying because the relative net income displays how much SAP retains on each euro sold. Now we need to take competitors like Oracle into account to be more able to make significant statement on SAP's performance. As you can see in the tables and in the diagram, Oracle has about 20% total cost of revenue, whereas SAP has about 30%. Because Oracle has about 10% lower cost of revenues, they have also the higher gross profit than SAP. In the end, this leads to SAP having a net income of 12%, whereas Oracle has about 28%. But how do we make decisions now? One way would be to use financial ratios to make those decisions. At first, we will look at the debt ratio. This does exactly what the name suggests. It shows how much your business is in debt. SAP has a debt ratio of 52% and Oracle of 62%. Everything below 60% is considered as good. In this case, SAP is pretty well positioned, but what could SAP do if they wanted to decrease it even more? The most obvious measure would be to raise equity and increase the total assets. However, it is very difficult to do so. Let's look at the current ratio now. This measures whether or not your business has enough resources to pay its bills over the next 12 months. SAP has a current ratio of 105 and Oracle of 3.98. It is obvious that Oracle has a very strong financial position here. So what can SAP do to increase the ratio? One measure could be to take a long-term loan to finance the operational business. Now let's have a look at the profitability ratios. These show how well a company utilizes its assets to produce profit and value to shareholders. SAP achieved a return on sales of 12% in 2019, which is significantly lower Oracle. But it is very hard to improve your return on sales ratio. Particularly interesting for investors is the return on equity. SAP achieved here a 10.93%, whereas Oracle earned an outstanding 49%. 15 to 20% is considered to be good in most industries. So again, Oracle proves to be more profitable. What can SAP do now? The simple answer would be to reduce costs and increase prices. But this is easier said than done. Rothio will now talk about the SWOT analysis and give an outlook for SAP in the future.
Now let's try to develop an outlook for SAP through the SWOT analysis. Strengths. SAP's strength is that through the use of its software, the information will be of quality, avoiding duplication and redundancy of data. Security with SAP is also guaranteed since it ensures that your customers' data and information will be protected. It also provides a better customer service given the fact that it delivers quality information to produce a quality enterprise, better access to customer information, and faster response times. Highly skilled workforce through successful training and learning programs. The company invests a lot of money and resources in the training and development of its employees. Therefore, their employees end up being more motivated and high skilled. Weakness. Finances are not good enough. The financial plan is not done properly and efficiently. The current asset ratio and liquid asset ratio suggest that the company can use the cash more efficiently than what it is doing at the present. More new technologies are needed. SAP, as said before, works in 180 different countries, and given the expansion of the company, SAP needs to invest more money in technology to integrate the processes across the board. Right now, the investment in technologies is not at par with the vision of the company. There is a problem with work cultures. The integration with companies of different cultures it is very difficult for the company SAP. It has a share of failure to merge firms that have different work culture. Opportunities. New sales channels. The vast investment into the online platform has opened new sales channels for SAP that in the next few years the company can leverage this opportunity by knowing its customers better and serving their needs using big data analytics. They will be able to win over more customers through these new channels. Cheaper transport costs. The lower shipping prices will bring down the cost of SAP's products, thus providing an opportunity to the company, either to boost its profitability or pass on the benefits to the customers to gain market share. New technologies. The new technology provides an opportunity to SAP to practice differentiating pricing strategy in the new market. It will enable the firm to maintain its loyal customers with great service and lure new customers through other value-oriented positions. Threats. Intense competitions. Nowadays, given the advantage of the sector and the profits it makes, the competitors are increasing. It also increases the pressure of making profits and sales. The main competitors are very strong, such as, for example, Oracle. Currency fluctuations. Given the huge amount of countries in which SAP works, it is exposed to the possible currency fluctuations, especially given the volatile political climate there is in many countries. And the final outlook, as a recommendation, the most important thing is to invest in new technologies, since technologies always create opportunities in an environment like the one we are living, in which is volatile, uncertain, complex, and ambiguous. Through innovative technologies, we could reach more parts of the world and open up to our clients. The new technologies will also encourage the inclusion of different work cultures. Lastly, it is important that SAP somehow tries to reduce their operating expenses in order to increase their net income.
Thank you for your attention.